Hi, welcoming everyone to the India Market Review for the week ending Friday, 11th of August 2017. The earlier IMR that we did was 2 weeks back, 28th of July, in which we had very clearly stated that the Nifty was in some doldrums and that it was pretty shaky. And while it had a possibility that it could go both either up or down, further up, or sort of at least do a correction, the bias was clearly on the downside, and we supported that with a lot of analysis of sector indices and also of the Nifty stocks. So since then, 2 weeks, the Nifty has come down more than 200 points from its highs, and we are right now at a, I wouldn't say a critical place, but we are at an important and junction where it is sort of a decision point where we decide whether this is a correction or this is going to be a downtrend. And that is the theme of the first part of today's IMR, part one of today's IMR, where we are going to ask the question about whether this is the start of a downtrend or is this a correction of continuing uptrend, and how we should be positioned both from a long term and a short term perspective, right? So without any further ado, I'm sure there are lots of people in this IMR who are keen to get this answered. Let's start looking at the markets with starting by looking at the global indices. And well, one of the things that we all know about, which is very, I wouldn't, seriousness is very difficult to assess in this world of news, which is genuine, not genuine, fake, not fake, God knows, all these issues. So 11th August 2017. So we've got some pretty hot global factors. We have the North Korea issue, and they're threatening to send some missiles towards Guam, basically in a sense a direct attack on America. And we've got a crazy enough situation in the world today with both the heads of America and North Korea. God knows what they'll do. I don't know whether there is any possibility or even any uh, sense in trying to predict what could or could not happen. For all we know, this could suddenly disappear from the radar, and some back channel talks, suddenly something happens, or who knows, there is one missile blowing up right as we speak at this IMR and land somewhere, who knows, near Japan or in South Korea or somewhere in Guam, and like what next, right? Um, Very unlikely that there's a world war going to start, but surely there is something pretty serious going on. Will America get into another war? Will there be a preemptive strike on North Korea? Then how does China react? So, there's a whole set of very interesting possibilities there. And at our end, we've got the Doklam issue, right, with China. Now, again, is this something serious? Really don't know. I really don't trust news channels anymore, whether they are blowing things up and spreading paranoia, or is it real? Just don't know. And in this environment of increasing nationalism, etc., it is tough to say, what the situation going forward is going to be. So who knows? Is there a war going to break out between India and China? Well, could be. Um, so these are some, I think, very real issues to think about, and they are, well, for depending on how you want to look at it, they're definitely spooking the market. In terms of many other things, there is of course the monsoon, and of course where I sit here in Bangalore, it's been a pretty bad monsoon. There's been talk about half the reservoirs in Karnataka being half full, or all the reservoirs being half full. So who knows what happens in the next few months in the coming summer is a very moot point. There is some talk going on about whether Karnataka should release water to Tamil Nadu, etc. But anyhow, this is a local issue. But at a national level, I don't know if anybody has some um, views on how the uh, what monsoon all across India has gone. Are we normal? Not normal? Right? No idea really. So that's another thing. And as I'm looking at mm, the website, well, very interesting that it says there's a crisis in Los Angeles. There's a state of emergency that has been declared in LA, and there is a really massive rainfall going on there, and some places have been, well, quite flooded out. So that's something that's interesting. Have a look. This is definitely interesting. And let's see what we have for India. Forget it. Let's say India monsoon. Alright, Indian monsoon 2017 IMD. Alright, yeah. Alright, so really not able to make out from this. Overall, what's the big picture? Right, related. Right, not really sure, but I think the updates. Right, so to come back to the discussion, I think the monsoon overall has been, a little bit iffy, if I'm right, and how that will pan out into the agricultural situation in the months ahead will be something interesting to watch. So these are the things that Okay, there is also the, forgot about it, the Trump Russia investigation that is taking on a whole different role altogether, and it could become something which is quite serious and significant. And I think in India we have to look at Modi's speech on 15th August. He might say a few radical things which could, who knows, affect the market. We're not really sure. Some big bang issues, maybe reforms. Can't rule it out. And we are essentially getting into, I think in the next 6 months, a year, we'll get into election mode again. And there'll be a lot of preparation going on towards that across the country by the BJP for sure. So at this point, looks very much like Modi would come back re-elected very strongly. But 2 years is a long time in politics, and we'll see how this pans out. So these are some of the immediate things I can really think of. So July, August, September, we are in the middle of the second quarter of the financial year. Let's see how it goes. GST looks like no major disruptions, so that seems to have transitioned pretty nicely. So in terms of current affairs, geopolitical factors, these are the things I can think of. If there's anything you can add or would like to discuss, then please feel free. But all said and done, if you look at what is there on the screen and the factors listed, none of them are really, what would I say, positive or conducive to is what makes the market happier, right? And there is definitely the North Korea issue is something that could just blow up quite literally, and who knows what happens with that. And in parallel, so these are very serious and significant event risks that are there, and any one of them, escalating or any one of them resolving could very quickly make the market drop a lot or rise a lot, in my opinion. So in this situation, little difficult. The uncertainty levels are much higher. That's, I think, yeah, that's the word I was looking for. Right. So the uncertainty levels are very high, and the markets don't like uncertainty. They like to sort of have a sense of what is likely to happen. And when things are uncertain, things tend to get chaotic, and if nothing else, things tend to be more biased towards the downside and not on the upside, right? So this is what I would think is the current situation. And if you look at the screen, you should be looking at the Dow Jones industrial average, the index from the US, and very clearly you can see that yesterday it has come down quite a lot. You got a Marubozu red candle, and it was anyhow going up with in a sort of weakening fashion. Volumes were coming down, a sort of rounding top, but definitely the trend is not yet broken. The uptrend is definitely very much intact, and it could come down another 100 200 points before it decides to maybe start a downtrend. And the thing is that ever since 2016, after this up move happened, we really have not had any major correction in the Dow Jones index. So it'll be interesting to watch what happens going forward, whether this is going to correct and become a downtrend or not. So that's a little too, definitely too early to say. Going across the Atlantic and starting with the UK, the Brexit thing is just getting back to us. There is a lot of talk about sort of infighting within the UK cabinet, and no real clarity on what the British government's position is. And things could, who knows? And that's another thing to keep in mind, in the sense that uh, Prime Minister May could fall, and we may have who knows, fresh elections or a change of heart, for that matter. European Union has kept its doors open and said so very publicly that should UK change its mind, it would be very, very welcome back to the Euro fold. And if that happens, that's another big kick for the European Union, sort of the globalization efforts, and that could just in very quickly revive sentiment. But having said that, really no clarity right now. I mean, clearly we've got a sort of double top in the US market, and sorry, in the British market, going down, and 7,550 has put us end to the rise. So it's come back to its old support, old previous life high, by the looks of it. I think it could break that. I'm just saying, going by the looks of the candle. And if it does that, then further down moves are quite likely. Coming to DAX, which is the main index in Germany, and that's already been trending down for since June. So 2 months we've had a downtrend in the DAX, and this downtrend getting more and extending into time. Clear lower tops, lower bottoms, and a correction that is clearly happening. Again, there was no correction after this move here in mid-November last year. Been going up, and now it is going sideways and going down. There could be some support at where it is right now, but nothing to really suggest that it might stop here. We'll have a look at what the current situation is after we review all the indices. And looking at CAC France, that's also been in a downtrend. So no wonder. I mean, in a sense, if you look at the global forces, they're all been bearish. US was the only thing to sort of turn down just sort of yesterday, today. And this is Nikkei, and Nikkei is also been going sideways and now has clearly slipped down. So across the board, the global factors are definitely not conducive as far as the uh, uh, markets are concerned. So very clearly, some bearishness has taken hold. No doubts about that. Now, looking at where the world is right now as we speak, if we can just go down uh, and have a look at it very quickly, then we can see that the US very clearly is in the green right now, right? So about zero point 0.3 to 0.6% up. And then if we look at we used to have this, keep changing the interface. Uh, right, look at the FTSE very much down, 0.8%. So that's not a good sign. And then where was the whole thing for? Uh, yeah, so this is what I was looking for. Uh, so Europe across the board, whether it is Belgium, Euronext, CAC, DAX, all in the red by about 1%. Hang Seng down 2%, and Singapore down 1.3%. Only US is what is bullish and well holding the market up quite nicely. Right? So this is something which is whether this is enough to hold the market and revive the market on Monday, and next week is a short weekend, is I think a moot point. Overall, the trend is definitely down, and we come back to the Dow Jones. Even if it is up today as we speak, then it is just probably a bounce up, and then who knows, may come down. But clearly, the bearishness is very much on the charts. All right. Now, if from here we look at the Indian market and look at the NSE, then what we'll see on the NSE is clearly a bearish market. We've seen pretty strong red candles, three red soldiers rather, and it has broken the 50-day moving average. And what is interesting and what is important to note, and this is where we come back to the question for the day, is this a downtrend starting or is this a correction? For now, it has nicely taken support on the previous high, right? So this was a meaningful high. There was a smaller high here, right? So if it had taken support there, well, technically even better, that would have been a stronger uptrend. But nevertheless, this is this 9,700, give or take 20-30 points this side, that side, is a very important support level to be aware of. And if I look at the weekly candle, now that's really looking a little, what would I say? Shall I say scary? That's a big, I think this was the biggest drop in the last 1.5 or 2 years, but probably in terms of points, not in terms of percentages in a month or in 2 weeks. So we are off to a pretty bearish view on the NSE, and this really could be just the start of something deeper. And today, in this week, we have gone down with definitely higher volumes. This is a weekly candle that we are looking at. And generally, if you observe from the past, then really not we've had candles like this, but very unusual to get only one weekly red and then the market goes on, right? So maybe there's another week or two of red candles. Who knows? If you just look at the past, this is a weekly chart. There is maybe, for example, here, one big red candle and then it went sideways and then dropped. Just 1 week of red. But overall, looking at this is now looking a little, uh, not little. It's looking more than you know just a correction, I would say. And if it was a correction, more like something like this, small red candles. But here you've got a deep red candle, and that is something that one has to definitely keep in mind. Having said that, the long term trend is definitely still intact. What is to be noted is in the weekly chart, there is absolutely no um, uh, divergence. There is no weakness in the indicators. They're still actually showing strength, and for all it could just bounce back. But looking at the global factors, that is looking a little unlikely. Coming back to the daily chart, we've definitely seen crossover and weakness building up. Volumes have been building up, as you can see, and there has been, if you observe, now it will become a little clearer. And we did mention this bearish divergence that has been there in the Nifty for quite some time. So we could actually be seeing some correction before it goes down, right? So I think at this point I would definitely be more inclined to say that further downsides are possible. Maybe 9,550, maybe even 9,350 is possible. A bounce, if any, probably now should be more looked at for perhaps exiting any longs rather than building any long positions at this point. Of course, this is the overall market, and on the Nifty individual stocks, there are actually a few individual stocks which are quite bullishly placed, and we'll see that in the part 2 of the IMR. But right now, this is definitely looking weak. We could get a bounce maybe on Monday, because we've already corrected from 10,144, 150 to 9,700. That's a 450 point correction. Actually, I should update that. 450 point correction from its highs, and that's almost about 4.5-5% correction. And so far, really nothing that has bounced. So we could get a bounce, but that bounce perhaps should be used for shorting rather than going long, and also maybe to get out of any existing longs that you have, right? So that's the view. If it does go back 9,900, for sure is going to be a resistance. We are at 9,779 right now. Sorry, 97. Where did we close? Yeah, 9,710. Yeah, we closed at 9,710. So Monday morning could be a decider based on who knows what happens over the weekend globally. Do we get a gap down on Monday, or do we just stay here and watch? Because Tuesday being a holiday, it might be a low volume or a low activity day, and then suddenly something would perhaps happen. So anything is really possible, and I think at a sort of critical point juncture, and Monday could perhaps give us the answer. But at this point, looking bearish, looking 9,550 is looking more possible than 10,000, right? So that's another almost 950, 200 points down on the Nifty, right? So I think both from a sort of short term, long term, in terms of weeks perspective, might be more definitely better to be cautious on the bullish side. All right. So having done that, we would now move on to looking at the individual sectors and see how they are shaping up. So we have the Nifty Junior, now called the Nifty Next 50. And what's nice is we have a green candle there, right? So the mid cap space definitely showing outperformance, and that's been the case for actually quite some time now. The mid cap space showing outperformance week after week, month after month, as a matter of fact. And the thing is, however, it has corrected more, come back to the, you know, 100-day moving average and then bounced from there, while the Nifty has not yet gone to the 100-day moving average. It's broken the 50-day but not the 100-day, while the Nifty next 50 has gone to the 100-day and taken a bounce from there. But I would say again, it's just a bounce, may come back to come down to 25,000, or who knows, 25,000, 200-day moving average is where it is. And if you go back to the Nifty and ask where the 200-day moving average is, that's at 9,200. That's a way down, right? So really possibly a long way to go. All right. Looking at the broader market, CNX 500 index, very much the same case, except that this is even in a sense worse because this has, I would say, broken this support, right? So this support has been broken. The previous top of the CNX 500 has clearly been broken, and it will be interesting to see, what happens from here. If it breaks the 100-day, then further downsides are definitely possible. So broad market has broken the support. No reason to believe that Nifty will not break that similar support. Right. Okay, so even more bearish evidence has been adding up. And if we now go on to the sector indices, we'll look at the Bank Nifty. Look at the Bank Nifty. The Bank Nifty is, well, interesting that uh, showing some support at the 50-day moving average. It's not really seems to be in a mood to correct. It has gone to the 50-day and taken support yesterday and today. Does it turn back up? Does it break that? That will be really interesting to watch and see how it pans out on that front. Right. We've got really heavy rain happening in Bangalore right now in my area. But a few friends I've been speaking to, they've been talking all sorts of mixed things. Some rains in some places, completely dry in some other places. So who knows how it will be. Right. All right. So this is your Bank Nifty, and that is definitely showing some strength. However, the PSU banks are in a mess. Right. The PSU banks are really being beaten down. Again, that level of 3,300 to 3,500 on the PSU bank index proving to be a real, resistance. It's really not letting the bank PSU banks go up. So PSU banks, as usual, rather not as usual as in always, but definitely as usual as in very often, not really doing as well as the private sector banks. And you can see that they have completely broken down, come to important support level of 3,300 on the PSU bank index. And if that breaks, then who knows, I think another 5-10% fall could easily happen on the PSU bank index, and we could see 3,000 happening on the PSU bank. So that will, and there's some heavyweights like SBI, etc., which is there, and we could see the public sector banks come down quite a bit. Pradeep is asking evening star on Bank Nifty weekly. Well, yeah, you could say that. I mean, this is a weekly chart now. Bank Nifty. Sorry, you're talking about Bank Nifty. Okay, I'll go back to that. But on the PSU banks, then you had a shooting star last week, and now we've got a sort of very strong confirmation of that shooting star. So the evening star there. On the Bank Nifty evening star, yes, absolutely, very well pointed out. Bank Nifty weekly candle, evening star, and it definitely could be the start of further down moves. Right. So if it does, the only real strong support is at 21,000. Right. So that is something to definitely keep in mind. Right. There we go. So 21,000 on the Bank Nifty. Could happen. That's almost 3,000 points down, right? And that's almost about 12-13% down from current levels. Right? We've had a pretty vertical run up from 18,000 to 25,000, 7,000 points. That's almost 30%, right? Without any correction, and some correction will definitely be due. And yeah, so little again too early to say whether this is just a correction. Again, not seeing any weakness in the indicators. So just using that as one more point to hold back from saying that this is very bearish. It just could be a down move for who knows, a couple of weeks, and then we could bounce back up again, right? But yes, definitely evening star seen in Bank Nifty. All right, so the banking space, which is a pretty strong heavyweight in the Nifty, showing good bearish evidence. Let's look at the other indices. So we have auto, that's clearly fallen a lot. That was showing a bearish divergence for about 4 months now, and or actually much longer, 6-7 months. This is a weekly chart, so maybe that is now getting corrected. And it was just a fall after a fall. There's also the sort of spooky news about uh, taxes on the SUVs going back to the pre-GST level, so that would have spooked the auto industry a little bit at least, and this contributes to the negative sentiments which are there. And we are also seeing a bearish divergence in the daily chart, and well, that's where we've seen this fall from 25,000 to 23,000, so that's almost a 8-9% correction. If there's a bounce, then great, but probably further down moves are going to happen. Then looking at consumer durables, so this is one space we usually don't look at it, which is actually showing a lot of strength, and that's really surprising. Really, none of them are strongly a part of the Nifty, but nevertheless, it is something to just keep in mind that there are some spaces in the market which are completely outperforming the market, and the consumer durable space is one of them. Whether it's because of the upcoming Diwali season, or it's a little too early, we're not even in September, still in mid-August, or who knows, the market knows something, I don't know. So that's definitely not bearish, it's actually bullish, but still I would not be buying into it because the overall markets for now seem so weak. Capital goods, well, they're just staying in line with the rest of the market, and that's also turned down. So really nothing to say on the capital goods space. There was what I would say hope that it would turn up, but clearly that's not the case right now. Weekly chart also showing lots of bearishness, right? So this is where the capital goods is, and then coming to the FMCG space. So FMCG last week, 2 weeks back, made a new high. That gap down, that was because of ITC, big heavyweight, but that gap has not been closed, and that continues to sort of just trickle down and go down further. The healthcare space has basically been decimated, and that's just been. There was some hope in July that this uptrend would continue, but again, this has really taken a turn for the worse and really been beaten down. Actually, for the last 2 years, it's not been in good shape, and looks like. But today, right, so some sort of recovery after a big sharp fall, but too early to say whether that would be over 12,000. No support here. Maybe it'll come down to even 10,800. We'll have to wait and watch. The IT space, so this is where there is still some hope. The IT space, look at that, right? Yesterday and today, still holding out and still not giving up. and holding on to long-term supports and holding on to long-term moving averages. It could really be a sort of, well, for what it's worth, a small savior in the overall market. If you look at it in the weekly chart, now this is very interesting because we've got a symmetrical triangle, and is it going to break out or break down is the question, right? So I think maybe next week or the week after that we'll know the answer to this. Looks like a lot of strength actually in the IT space. So in spite of all the stuff in Europe, sorry, in US, H1B and all that stuff, I am just wondering whether there's something very quietly cooking in the IT space, some sort of slow transformation, definitely layoffs and all that, which is going to, in a sense, maybe not dramatically, but meaningfully increase the profitability and margins of these IT companies. And so, yes, while people will suffer in terms of job losses and all, the companies themselves might do well financially. And after being sideways for almost 2.5 years, but the IT is going to maybe lead a rally now, and that could be an impetus for the overall market to revive. I don't know. I'm just speculating right now. It's way too early. Right? So 10,300. It's been October since last year October, so almost 9 8 9 months. We are just seeing this sort of sideways move. Having said that, there's also one thing to note that it's not been able to come to these levels. So there's a sort of weakness that is there, and that has to be definitely to be kept in mind. And what will that weakness entail? Will it break 10,200? Will it break this set of moving averages? If it does that, then IT would probably collapse maybe about 3 4 5% easily, right? So right now still holding out, but we'll see. All right, so metals, after having a really good run, have also decided to correct with the overall market. Tata Steel came out with some really good results, and on I think Monday or Tuesday, all the metal stocks had really rallied well. But now clearly the sentiment has changed, the mood has changed, and maybe just in line with the overall market, they have decided to go down. So this is where the metal indexes, so no hope there, bearish. The power index, that's also just cracked and come down to the 200-day moving average and a long term, not a long term, is it? Yes. All right, so we're talking about this level. So from about 4 5 years, it has come to a support level, and again we saw bearish divergence here earlier. Of course, that price corrected there, so it's no longer valid, but weak support for now. I think any bounce should be used for getting out of power, right? PSU index, really nothing to say there. Reality, so that's also finally showing strength, and no longer, it is also on its way down. I think it will crack to 1800. So what's interesting, and let's see if we miss anything. CNX Infra, all right, IT, Pharma, okay, really nothing else, right? So what's interesting is, except for IT, not a single sector index is showing any strength or outperformance. That is something to keep in mind, number one. Number two, and again, that IT thing is very iffy. The other thing is, almost all the sector indices are much closer to their long-term moving averages, but not the Nifty. And therefore, the Nifty, just uh, for technical reasons, reversion to mean and things like that, could very well come down, led by one sector after the other, and then we'll have to see what happens. So I think at this point, further downsides are very, very likely. Uh, Good to short, I guess. There's really nothing else. Short the market, and get out of the longs, right? I think across the board there will be a lot of opportunities to buy the same stocks, at least in the frontline indices, at lower prices in the days and weeks ahead, right? So this would be the overall view of what's happening in the markets from a global perspective and sectoral perspective for India. So, which brings us to the end of part one of today's IMR. Let me change this to 450 points down. Right, correction or downtrend. It's, I think, iffy, looking like if the index and everything else breaks a few more levels, both on support and moving averages, then I think we've got a downtrend in place, at least a short-term downtrend. Could be a secondary downtrend in a longer uptrend. As of now, if we have to be very bookish about the analysis, it's a correction. Right? We could get a surprise, and one of the scenarios that comes to my mind, and let me go back to the Nifty 50. One of the scenarios that comes to my mind is something like this, and we'll have to see. We could get another up move, right? Maybe it'll come down, maybe 9550, but again a bounce, and then we get a very large multi-month, almost 1 year head and shoulder top, right? And this could take another 1 or 2 3 months to pan out, and then we see a big correction, right? So if this is not the downtrend which is going to lead the market down, then another bounce could actually not necessarily be a bounce to uh, uh, of the uptrend. It could just be a scenario that I'm talking about. On the other hand, if 10,150 gets taken out, 10,140 does get taken out, in who knows for whatever reason, it could be Diwali, it could be um, any of those global factors that we spoke about, just disappearing or resolving, or any of this. If that happens, then we could suddenly see another big relief rally that takes the market to, who knows, another big huge life high before a big correction happens. Now, why a big correction? Because we have really not ever, in a sense, not ever. Let me make this a cleaner. Where is that? Right. Okay. If I just look at for something clean, then just going by support resistance, please note that we have not tested this area as a support for now, right? We have not tested this area, which is at around 9,000. If the market does come to 9,000, basically you'll get a 10% correction from where you could get a nice sustained up move, right? So maybe next 1 or 2 months, 3 months, and then we start the rally again. And this is a weekly chart. So in a daily chart, what happened here? Oh, this was explaining something in the indicators class. Right. Right. So we've come to, this is in the daily chart. So this is a daily correction that we are looking at, but in the bigger thing, this is the level that I'm talking about, right? That has not been sort of tested in any meaningful fashion. So that could happen. We don't know whether it will happen now or not. So that's something to keep in mind. So 10,200 is a critical level, 9,700, 650 is a critical level, and then I would say around 9,100 to 9,000 would be a critical level. These are the levels to watch out for, right? And well, just to close the session, I would say that looks like the evidence is quite bearish right now rather than bullish. So keep that in mind for the next week, and take action according to your views and positions in the market. Right. So thank you very much, bringing us to the end of part one of today's IMR. I will close this webinar now, and I'll be sending out a link just in the next couple of minutes for the Nifty 50 stocks review that we will do, and look at how the individual stocks in the Nifty are doing. So hold on, we may take a small break if you like, couple few minutes, 4-5 minutes, and then we'll start part 2 of today's IMR. Thank you, and see you on the other side.